welcome to the Property Management Law Solutions Podcast. Here's your host, Attorney Tim Baldwin.
Nothing in this podcast was legal advice or creates an attorney-client relationship. Reach out to us at www.pmlawsolutions.com. Hello, everybody. Welcome to the Property Management Law Solutions Podcast. I am your host, Attorney Tim Baldwin. And as usual, we are going to discuss topics that are relative to property investments, landlording, property management. And we have a guest on our show today. He is Dr. Axel Meierhoefer. Welcome, Dr. Meierhoefer.
Tim, thank you for having me, and you have the most perfect pronunciation.
Well, as I'm sure the audience can tell, you're probably not from America, right?
Correct. Yeah, I'm from Germany.
All right. Well, I like the accent. It's fun. I have some clients actually from Germany, and every time I talk to this one in particular, he's in Florida, and it's a thick accent, but I enjoy listening to him.
Yeah, I've been in the States now for 30 years, but I guess it's not going to go away anymore.
That's okay. That's good. All right. Well, Dr. Meierhoefer, if you would just introduce yourself to the audience and kind of let them know who you are.
Yeah, like we said, I'm originally from Germany. I was flying for the German Air Force and got an opportunity to do what's called an exchange job, where you literally take the job of another person. In this case, I got the job of somebody who was running a fighter squadron for F-111s in the U.S. Air Force. Then got a number of other projects that kept me in the U.S. all the way to the point where the flight surgeon kind of gave me the indication you won't have much longer the physical ability to fly. And the question came up, would I want to stay in the service or would I want to retire and do something else? So I decided to get out, got recruited almost immediately into a software company in California, did that for 5 years while in the evenings going to school, because everybody said you have to have kind of like a graduate degree if you really want to do something. And the funny thing was that after the 5 years, I realized, I really want to try if I can run a business myself. Not sure that I really needed a doctorate and a graduate degree for that, but ultimately that's what I had. And I started my first business in 2005. And while I was developing it, I realized, okay, military and even a regular job gives you some retirement options and some plans and systems. But when you're really on your own, you have to kind of figure something out on your own. And that's how I started getting into real estate. And that is what today is basically the second company and the main thing I'm doing on a day-to-day basis. Wow.
Well, if the audience goes to your LinkedIn, which I'm looking at now, and I'll put all this in the notes in the podcast notes, you have a lot of, you just hit a very, very high level of what you've done, but you've got quite the experience. So if you find Dr. Axel Meierhoefer on LinkedIn, you can see that. I see also that you've written a book recently. What is that about?
Well, people ask me because I like it. I think my clients like it. And I'm, like I said earlier, come from a German background where we're kind of known for systematic and structured approaches. So the name of the business and the approach that I've developed is called Ideal Wealth Grower. And so that's also the title of the book, because people said, well, I see that you're offering this mentoring program that really helps people develop a passive income portfolio. If I wanted to learn a little bit more about what's the methodology behind and why would this be something that I might want to consider for myself, isn't there like a easier, lower priced entry? And I thought, well, if I just write a book describing what is ideal and what is grower and kind of the wealth is what we all want to get to. And that's basically what the book does. And it also puts it in a little bit in a bigger scheme, because obviously passive income is not exclusively real estate. There are other things, how you build a portfolio to have diversification and security and things like that.
Where can the audience find this book?
You just go, I mean, you can Google it, but you can also just straight out go to Amazon. It's available as a Kindle version. It's available as a hardcover version. Even if you're in a different country, it comes pretty much in almost any most common currency that Amazon has a platform.
Excellent. Well, I have to ask, since you're a pilot, because I live in Pensacola, Florida, which is the cradle of aviation in the U.S. military. So have you ever been here to Pensacola?
Yeah, absolutely. I've been there. I've actually done flight trials with the F-111 to support the U.S. Navy. If you want to, I can tell a little anecdote about that.
Yeah, do that.
So I don't know if a lot of people know, but when the Iraq war ended and everybody came back home, what you do, and I think it's a good practice. I'm sure, Tim, you're doing this when you're going through a lawsuit and everything is done and you won and you have all the documents and stuff, to go back and say what worked really good, what didn't work well, what do we need to address and maybe do different next time. And so the U.S. military did the same thing. I just happened to be part of this F-111 squadron. And one thing that they found, and it's kind of shocking if you really think about it, at the time, we're talking about late 90s, 1990s, early 2000s, that the systems between the US Navy and the US Air Force were not synchronized enough so that you could really make sure that you knew a plane on the radar is actually yours versus the enemy. Wow. You could do it within the Air Force and you could do it within the Navy, but you know, in a theater like we had down there in Iraq, and it's kind of like current now again because we are having this Iran war. You have a lot of planes going all over the place, and obviously when a plane comes back home, it's kind of coming towards you, and you really want to be damn sure that it's one of yours and not some of the enemy. And so I ended up going to Pensacola a couple of times where the Navy had said we need people that pretend to be the enemy against coming towards land, which is protected by our ships, so that we can make sure that these revised systems are actually working properly. And there was obviously, I mean, you have probably heard this, between the different services, there's a certain pride for each service to claim to be better than the other. For so sure. Part of my job when I came to Pensacola for these trials was to always make it to the target and kind of defeat the Navy. So we did that multiple times until the admiral for the Navy said, okay, for making that trial technical, at least one day we have to just have you fly straight in level over the ships and to the target, and you can make it to the target, but we want to make sure, because every single time you screwed around so much that we weren't quite sure if we really had the right thing. So that was a lot of fun and fond memories of Pensacola. I also, the target, just for people familiar with Florida, was right off Eglin Air Force Base. So yeah, so you flew basically out from Pensacola all the way down to the open sea and then turned around and came in towards Eglin.
Very good. Well, I'm glad we have that in common. That's pretty cool. All right. Well, there's several topics I want to kind of get into and let you develop here, and I'll just kind of serve as your moderator, I guess. The first one is underdog properties versus hot markets futures, and then the next one we have is solar power walls, robotics, and free labor, and then the next one is AI ecosystems, and then the last one is the age of abundance, macro transformation. So let's talk about the first one, and this may be somewhat unfamiliar with people who are listening. So feel free to get as basic as you want, and for my purposes as well. So the first one, underdog properties versus hot markets. So when we talk about underdog properties, what are we talking about here?
Well, the biggest distinction I would say is, in investing, even if you go to the very, very, very basic level, most people say investing is basically I'm buying something. We're not even defining what you're buying, but you're buying something and you own it now, and then you're hoping that it is increasing in value to sell it, right? And the term, and this is part of like my little ideals spiel, is the letter A for appreciation. So a lot of people, I think it's also driven by looking at the stock market, which is in the media all the time, is if I buy real estate, my goal would be that I can hold it and then sell it for a higher price than I paid and I make a profit. Same thing like you buy stock. The fact that you have leverage and all these other things are more technicalities, but from the highest level. So when you then say, well, what is an underdog property is first and foremost something that is not most likely going to make you a lot of appreciation. Now, this goes back to why are people coming into my system, or what is the system actually about? There is obviously a difference to between making a profit and generating passive income, right? And in a way, one of the things, when you go back to our little introduction conversation a few minutes ago, I said when I started running my own business on my own, my idea just for me and my family was to build basically a way to have income as retirement income. Now, there's no age associated with. If I could have, I would have done that at 45 or 55. It didn't quite work out that way. But fundamentally, the time window that you would have to have for these, what we call underdog properties, would be about anywhere between 10 and 15 years. If you have a good income source, a job, you're a lawyer, for example, or you're doing some other work that gets you good income, so you can put some money into investing. And the underdog property would maybe make 3%, 4% on average over long periods of time, and is probably in not really very flashy locations. So for Florida, it's always a little tricky, but since we're talking Pensacola, if you go Montgomery, Alabama, which is not super far away from you, right? I don't know that anybody would call that a flashy location or a place where you have a huge appreciation expectation. Let's say in comparison to a hot market, at least it has been hot for quite a while, like Miami. Right? Like, so in Miami at the right time, and it kind of obviously goes in cycles, but at the right time, and you get the cycle at the right time, you have a really, really good chance to have high appreciation. In Montgomery, Alabama, it's not so much. But what you have, and this is why I'm a big fan of that, is a performance ratio. And when people say, when we go to real estate in general terms, I'm sure, and maybe I haven't heard it as much in the last 10 years, but it used to be that you heard real estate is all location, location, location.
Right.
And what they don't say is for your own owner-occupied real estate, that is obviously totally true. When you're looking at it from an investing perspective, and I'm preaching this in my program, it's performance, performance, performance first. Where can I get performance, especially if I want passive income? And then suddenly I can go to Montgomery, Alabama and find a fully renovated property for $160,000 that rents for $1,500, which is almost meeting one of the little quick formulas is called the 1% rule, where you say, how close can I get with my monthly rent to be 1% of the purchase price? So if the place is $160,000 and you're getting 15, 20 in rent, that's pretty close, right? Now, if you try to do this in Miami, it's not going to happen. You know, it's a hot market and you might have appreciation, but if you buy one of those $400,000, $500,000, $600,000 places, they're not going to pay you 1% rent per month. Right?
So are you looking at Are you looking at the specific metrics of what indicates that it is an underdog? I guess some people may call it distress. I'm not sure that's probably not the right term. I think underdog is what you're saying, is that it may not be the hottest market, but it may perform well. So what metrics are you looking at?
Well, one of the metrics is, like I said, the 1% rule, and that is obviously in comparison to the economic environment of the different locations that you might actually look at properties. There's another little component that I'm going to get to in this approach that involves turnkey providers, because oftentimes, and like if you were actually saying, okay, I'm in Naples or I'm in Fort Myers or I'm in Orlando or stuff, how am I supposed to manage a property in Montgomery, even if it's a great performance, right? So part of the model, I just want to weave this in here, that we're using is what's called turnkey providers, which is just really quick, a company that has 3 pillars. Pillar number 1 is they have a development, meaning like construction, development, and renovation department. Number two, they have basically a real estate agency within the company. And number three, they have a property management department, all under the same umbrella. So if you were to buy that property, the 3-bedroom, 2-bath house in Montgomery for $160,000, this, in a sense, Underdog, or what you call distressed, is the starting point where, like in this case, the turnkey provider would say, are we going to take this property on? And that is typically a property that, in a very soft, friendly way, say, is in need of TLC, some tender loving care. How is this? Yeah. Because somebody owned it and didn't want it anymore, or it got inherited by somebody and they don't really live there, or whatever the circumstance is. What is kind of like one of the distinctions, and I don't know if distress is the right word, but one of the distinctions is to say, okay, we're looking for a solid foundation, we're looking for solid systems, we're looking at stuff like termite damage, structural integrity, those kind of things. And pretty much everything you can fix through a really thorough renovation, meaning like you can do new plumbing, new electrical, new kitchen, bathrooms, all that kind of stuff. And still, I mean, you have to keep in mind, still at that, with that, you're still ending at somewhere like between 150 and 200,000 in Montgomery, Alabama.
So when it comes to property management, you mentioned that, and that's something that's near and dear to us at our law firm, because we represent a lot of property management companies and landlords who self-manage their properties. And I can just, say from experience that one of the problems we see is that when these properties are mismanaged, many times they lose whatever revenue may be generated from those properties, or the expenses they have to incur because of either mismanagement, getting sued, being fined, and these sorts of things. So speak to that a little bit in your experience and how important it is to get that part of it right.
Yeah, I mean, the number one thing is, I would say, to that question, when you're working with turnkey providers, you want to buy the property after it has been fully renovated. So you're getting basically an empty house that still, smells fresh because the paint is new and everything is basically refreshed and renovated. You still go through the normal appraisal and inspection process. And especially the inspection process will tell you how good was the renovation. Now, here comes one of the benefits of working with a turnkey provider with those three pillars, because obviously the construction department within that company did the renovation. Now, you're going to work with the property management part of that business. And I always use this little anecdotal kind of psychological aspect to say, when I talk to the turnkey provider as if we had never talked to them before, I would say, hey, I want to entertain the idea of buying this property that you have on your website. And I saw that it's fully renovated. How proud are you of that renovation and the quality of the renovation you did? And I'm sure, Tim, you know this from your practice. They will say, oh, yeah, it's as good as can be. We are top notch, all these good words. And then my next sentence is, okay, well, then I'm sure you can put into the lease agreement or the property management agreement that if there's anything wrong with this thing in the first year, then you're going to fix it with your own construction company. And I'm not saying this to deceive them, but it's really a psychological, but also a matter of pride of how you run your business to say, yeah, absolutely. So when you compare with most others, one of the benefits of working with a turnkey provider in this approach is to say the property management department has the benefit of going in-house to say, hey, there is a leaky faucet, there's this and that and so forth. And the other benefit in this setup is obviously that you can be pretty much wherever. Yes, you can be in the US, but you could sit in Bali and be a digital nomad and have that house in Montgomery, right? Yeah. Because that's what they're supposed to do. The other little thing is a little kind of like nugget to be aware of is when you do a full-on renovation, kind of almost down to the studs, if something didn't get done perfectly or really, really well, when the tenant moves in, it kind of starts showing up in the first 3 to 6 months.
Yeah.
Right. Now, the other thing is obviously when you buy a property that is freshly renovated from a professional construction team, they know about these situations that you mentioned, Tim, where a tenant gets hurt or a tenant has issues or there are issues with the property or there's mold or whatever leads ultimately to a lawsuit. They want to avoid that because these turnkey provider companies, at least the ones that we're working with, they're not looking at 3 houses or 5 houses or 12 houses. They're looking at 200, 300, 1,200, 1,500 houses under management, right? And they will be constantly saying, Tim, can you help us with this lawsuit and that lawsuit and that lawsuit if you don't do a good job,
Yep. Well, one of the problems I do see from real estate investors who don't have what you're talking about, the turnkey partnership, is they will buy properties that are, they're below market, maybe they're wholesale, and they buy them in as is condition based on what the listing descriptions are. They don't go lay eyes on it. They don't have anybody go see it for them. So then they close on the property, and then lo and behold, it's the property is not in the condition that they thought it was in. Next thing you know, they're contacting us. Can they sue the seller, et cetera? So how important do you think it is for the buyer to either lay eyes on the property themselves or have someone like what you're talking about actually lay eyes on it before they actually buy the property?
I think it's absolutely fundamental, and neither myself nor any of my clients has ever bought, and this is now in 15 years of operations. You can imagine how many houses we have actually executed contracts on. We have not ever bought a house without an inspection, and you don't need to be there for the inspection, because obviously the seller, or if you don't want to do turnkey, the real estate agent will allow or help for the inspector to get in. The one little thing I want to say to people, yes, absolutely get the inspection. There is one thing to be aware of. Ask yourself, if you were an inspector and your job is to show all the things that you observe in as much detail as possible, that's basically the job description of an inspector, and you were to send a report with 3 pictures and 2 paragraphs, what would anybody who is not an inspector think of you?
Yeah.
And so that's the reason, at least in my opinion, it's a strong reason you will not find a property inspection report that basically describes an almost perfect property. Even I've seen inspection reports that were 75 pages long on a property that, in my opinion, was about as close as perfect as you can get it. But if you want to, there's always room to find something to critique. So as much as I say absolutely 100% unequivocal, get an inspector, but also be aware you will get a 40, 50, 80 page report that makes it initially look like, oh, bad. Can I even buy this thing? Look at the pages and picture and picture and picture and picture of all the things that he or she found to be. And it's not wrong. It's worth mentioning, right? Yeah. So I teach my people, you should think about it like a traffic light. Red are things that are security or structural or stuff that absolutely unequivocally have to be done. If you send that report to the seller, meaning like the turnkey provider, and say, okay, let's talk about what needs to be done to go under contract, and they say, well, we think we're good, we don't need your report, step away. Because anything that's red has to be done. Yellow is kind of the part where you have to negotiate. I give you one thing that almost every inspector will have in every report that I've seen, that only the really most experienced turnkey providers address. And that is, obviously nobody wants water near the foundation, right?
Yep.
But very few, especially with older houses, when you have the downspouts, are they connecting to anything? They basically come down, and then they come 5 inches, 10 inches at the most out from the wall, and then the water runs basically away when it rains. Every inspector that is worth a grain of salt is going to say you have to have at least 4 to 5 foot extension from the downspout so that the water is not collecting or puddling right next to the foundation or connected to some sewer line or something like that, which most people don't want to do because it's expensive. Now, is that something that should really determine I buy the property or I don't? No, not necessarily. You could pretty much say, okay, I give you the $300 to put the downspout extensions on everywhere instead of, you having to do it for free. But that's kind of the stuff where you're getting into, okay, there is room for negotiation. And the green stuff, and most good inspectors do this, they say, there is like a soffit that looks a little bit questionable. Somebody should maybe go up there and see if it's really solid. I didn't bring a specific ladder or measuring instrument or something like that to make sure. Okay, right? So you could say, okay, I'm aware of it. And you see, and the thing I want to say basically to the audience, Tim, is I have had turnkey providers who get the inspection report and say, thank you for the report. That gives us a good external view for our construction department. We're just going to fix it.
Yeah.
And you can have the other ones who say, no, our stuff is perfect. Go away with your report. And then you say, well, then keep your house. Right. And anything in between. But that's kind of like the thing. I answer long-winded way to answer your question to say, don't buy anything that is not thoroughly inspected by somebody who does this on a daily basis.
Well, how would you distinguish undervalued properties versus a value trap property?
Well, you say it so perfectly in a lawyerly sense. I would say in my language, it's you either buy something that is called lipstick on a pig or something that is solid, right? I mean, there is obviously a way to say, okay, how can I make something visually nice looking, right? And I'm always a little hesitant, especially when I talk to a great lawyer like you, Tim, to kind of be too suspicious. But to give you an example, if you take up some of the covering on the floor, right, whether it's hardwood floors or stuff, because there seems to be a soft spot, the proper way would obviously be to go in and see, okay, is there something wrong with the foundation or something like that? And if you find that, then you fix it and then you put the floor back down. The improper way, when you're doing this lipstick on a pig kind of thing, is you're seeing it and you're seeing, holy shit, there's a whole bunch more. I just do the necessary so it doesn't feel so soft anymore. Put the carpet back on top of it, right? So when somebody walks through, it's not an obvious flaw. But if you really wanted to do it well, it's a $10,000 repair. That's the distinction, right? And
yeah,
the issue is, there are a lot of things, if you look at a house in the United States, whether it's brand new or renovated or even distressed, like you mentioned earlier, where there are certain things that you could really only diagnose when you start opening up the walls.
Yeah.
And for example, right, like termites is one of those things. Right? They can be localized and they can be treated and it might be fine, or they can be all over the place in every wall and you don't know it. And, as soon as somebody opens the wall, you have a huge catastrophe. You can't expect an inspector to go into the potential house that you might want to buy and actually find all those things that are hidden in the walls or underneath the floor or stuff. I mean, some have crawl spaces, but if you have a house that doesn't have a crawl space or stuff, it's hard to find. So ultimately, that's, in my opinion, it's not a legal thing, obviously, but in my opinion, that goes to reputation. Right. And there is nowadays with AI and all kinds of other tools and great platforms, like, for example, Bigger Pockets. If you start, which I recommend, working with larger organizations that have large portfolios, right? I mentioned like 300, 500, 1,000 houses under management, then there's enough engagement with the public and with owners that if they don't pay attention to their reputation, it starts showing up in public. Maybe not in the newspaper, but in like the real estate community, I would call it. Bigger Pockets and is one of the examples where the people that use the platform for exchange of information would say, ABC turnkey provider again has an issue with this and again has an issue with that. That should give you pause to say, okay, if I consistently see that somebody is written up, that's a red flag or at least a yellow flag. Now, one little thing I want to say to the audience about that is keep in mind, and you can ask yourself how often you do this. We are all more and more conditioned to complain when something isn't perfect. We are not really very well conditioned to go in on any platform, regardless what it is, and to say, I love the way Tim won the case for me.
No,
right?
they do say that.
They do say that, but when you say, can you do, if you don't say anything about any platforms and stuff, would somebody voluntarily go out to the, I don't know, the Florida Lawyers Association and write in, Tim is the best lawyer in the area or stuff? Yeah. Not as much. My point is not that they don't do it at all. I'm saying, if you did things that they didn't like over and over and over again, because that's your style, it would be all over the place.
Yeah.
Right. So I want to caution a little bit, just because you hear something negative about a company, that doesn't mean you shouldn't check into them yourself and build your own opinion. But it's obviously a red flag, especially when people start showing pictures and stuff. That goes back to this lipstick on a pig thing. Right? When a company says we're doing renovations, or what I'm also always cautioning, why I'm a big fan of turnkey providers, you can buy houses from what's called flippers. People who buy a distressed or, somewhat dilapidated property, and then they fix it. And obviously you weren't there, and you only see the end result of the fixing, but you don't know to what extent and with what level of quality did they really approach the fixing. And I'm the first person to say there are great flippers who do an awesome job, but then there are also others who say, okay, I needed to put $50,000 or $80,000 in here, but if I do it smart, I can do it for half and make then that effort that would have normally been a cost into a profit. That's when you get these lawsuits and these complaints, and people want to get out of the contract and stuff like that. I personally believe a turnkey provider with a multi-hundred portfolio of properties under management has more benefit of protecting their reputation than just getting a little more money out of one single deal.
You raised so many excellent points, so many nuggets there that I think the audience will probably have to go back and listen to this repeatedly and make notes of what you're saying, or they can buy your book, or they can contact you to be their mentor.
Yeah, exactly. Happy to do so.
I'd like to shift into the next talk, which is looking into the future. If we can talk about this, and particularly with solar power walls, robotics, and quote unquote free labor. So let's shift into that. So give us a little intro into this topic.
Well, one thing I believe that everybody should, and when I say everybody, I'm always addressing investors, right? Especially people who are planning to or have already started investing in real estate. I think you have to ask yourself now, where are we in the evolution of technology, and what can we see coming in the future? And what does that mean for me as an investor? And one thing that I think is likely, that modern technology, robotics, AI, all these kind of catchphrases that we are hearing on a day-to-day basis will lead to extreme increases in productivity. Extreme. And they will, in my opinion, be coming faster than we can imagine right now, because a lot of this is exponential and not linear. Humans are good with linear, but not very good with exponential. So they're coming faster than we anticipate. They're coming probably more all-encompassing than we can imagine, because we know, we have experience maybe when the internet started, or we may have experience when the smartphones came out, or we may now currently experience when you have like Starlink and you can get internet from a satellite that's flying by, and you can be in your most remote hiking trail that never used to have any connectivity, and suddenly you have it. But all these things are kind of very narrow and, in a sense, gradual, even if the gradual part might be somewhat exponential. But it's not across all industries and all walks of life and all the different things we do. So from an investor perspective, I think it is important to say, okay, am I better off if I'm just doing my job and renting a place or have my own house and that's it? Or will I be better off if I own assets? And I'm not even necessarily qualifying which ones. I'm obviously biased to have at least a good chunk of it in real estate. And when you ask yourself, why should I ask that question? It goes back to, what do human beings, without even thinking about a job, what do they need? They need security, they need shelter, and they need food. Those are the three basic things. Then to sustain themselves, they might want a job and other things, and they might want to become like virtuoso musicians and go to self-fulfillment and visit the monks in the Himalayas and stuff. All great, but fundamentally food, shelter, and security is where it starts. So if you own shelter, that gets you a little bit ahead and gives you something that even with AI, with all the robots, all the technology, we still probably gonna need to live somewhere. Right, so that's one aspect. The other aspect then is, okay, where do people want to live in the future? Right? And there it gets a little tricky because we're getting to this, okay, first, the flashy, what we call hot market properties. But does that really mean when we have that increase in productivity that everybody will have more money? Mm-hmm. Right? When some people talk about universal high income, high compared to what? Right. And I know a lot of people are rather familiar with this universal basic income. If we go to universal basic income, I don't think investors like you and I or anybody listening to us has to be concerned. Because when we only have everybody has at least basic income, then they're going to continue to rent and all the normal stuff. If they have high income, to me at least, that would mean they have more choices to go to the places that are more desirable. And here comes then the challenge for you and me and anybody listening to say, okay, I understand I should or want to be a real estate investor, but with this high-tech, high-income, high-productivity environment, I need to pay a little bit more attention to where's the best balance between a desirable location that is not already massively overpriced or massively overregulated. And, I love you and Florida and everything, but I wouldn't want to have a property with an HOA and insane insurance fees and stuff like that. So the search will be a little more tricky, but the benefit on the other hand is we have AI and it gets smarter and smarter so that we can say, what are criteria of desirability that I believe the humans in 10 years or 20 years would want to have? And where is that balance between price and rental income and so forth still relatively intact? And let the AI just scour the whole country and find those locations. So that's what we are doing with our clients right now that don't already have started a portfolio, is to say, where can we anticipate that people would want to live if they could afford it? And we want to only afford it if the price value between like 1% rule or anything like that is pretty close. To your question about the tech, if I may just to tag that on, what I think will also become pretty normal is that people have more and more expectations that didn't used to be automatically associated with houses. Right? Like it is still currently pretty common that if you occupy a house and you want internet, you have to get a provider and a router and stuff like that. I'm very convinced in the not very distant future, everybody will just expect that there is connectivity all day long, 24/7, right? If we really go further to electromobility, transportation, the question will become, do we need a garage? Do we even need to own a vehicle ourselves? It might be more expensive to own your own vehicle than just do ride-hail all the time, which then also determines, is it really that big of a benefit if something has a 2-car garage or not that you might want to buy? Third is resources, right? If you want to have the connectivity, even if it's not for work, how do you make sure that you always have power to run the connectivity, whether it's your laptop or the lights or your dishwasher or the internet? And that's where the solar and the battery comes in, right? Where you can be independent. And I don't say that I have all the answers right now. One idea that I find pretty intriguing is more and more car manufacturers that do electric vehicles are now coming out with what's called bidirectional transfer. So you go either to your solar system and let the solar energy fill the battery of the car. But bidirectional means when the car sits there on the driveway, you can basically in your house flip a switch and use the battery in the car to run your house. Now, if you want to, I can give like a real quick little what that actually means in numbers.
Yeah, let's listen to it.
Okay, so if you have a household, let's say 2 adults and 2 kids with all the fixings that we used to have in a household, you're running anywhere between 5 and 10 kilowatts of electricity use. So you could put that obviously as solar panels on the roof, and that's what it generates, at least as long as the sun shines or there's light out. I'm only saying this if you think about most cars nowadays have between about 50 and 120 kilowatts in the battery. Right. So with this bidirectional thing, even if you are a big user and you say, I have a family who has like 150 different devices running at all times, I need 10 kilowatts. Well, your car has probably 5 to 10 days worth of that sitting there in the driveway. So it becomes a conscious decision. And that's why I mentioned earlier, do I want or need a car at all or not? Versus, okay, if I don't have a car of my own, then I kind of need a battery if I really want to be 24/7 independent. But if I have a car with bidirectional charging, I don't need a battery in the garage. Right? So those are some of the things that a lot of people currently, I'm pretty sure, haven't even thought about. I believe independence will be more important. Connectivity will become basically fundamental, like food security and shelter, right? Like being connected, because otherwise you basically are outside of the regular world, so to speak, right? And
so you're painting a picture of cost lowering, income increasing. So how do you see that playing out with real estate investors? Does the picture change for them much?
Well, the one thing, it changes potentially in one way and not generally too much. One way I see is that the income source is really unsure. And I don't have an answer. I don't know if we're going to have UBI or if we're going to have universal high income, or if this is only going to be in certain countries for certain community or certain states or certain industries. I literally have to say, I don't know. The only thing that I believe is that we are massively underestimating the productivity increase. Right, where certain things where we currently believe that people are needed to do the job, they will potentially go away so fast that the question ultimately becomes, and I just want to put it in terms, think for a moment, what would happen if we had 20 million people unemployed? We couldn't just sit on our hands and say, oh yeah, they're all going to find new jobs. Where? Right? Like when the numbers get to a certain point, we have to think differently about what do we do? How can we have a fulfilling life for that many people? And they won't all be like my age. They're any age, 20, 30, 40, 50-year-olds in the millions, while you can't just sit back and say, well, what the productivity gain only goes to the companies that actually generate using the gains in technology for their profits. And the public at large is just sitting there starving or having to sell their stuff and so forth. So it's kind of a forcing function in that sense. To answer your question, I go back to the initial thing that I suggested. When you ask yourself, will I be better off having assets versus no, even if it takes a while to get an answer to these 20, 30 million unemployed people, and I'm not saying anybody listening to us would be affected, but it will change the system in general. Right. So then somebody who has assets will at least have the opportunity to sell the assets, if not utilize the assets for other people to live in and get rent. And it doesn't ultimately with UBI or UHI, it doesn't matter if the rent comes from the tenant or if the rent comes from the government. One thing is not going to change. People will need to live someplace and they're not going to all live in their own home. We know that too. Right. Yep. So ultimately that also hopefully for listeners ties into why I said looking forward in the next 10 years, it becomes more important to also consider which locations do people want to live at. Whereas right now, I use this example of Montgomery, Alabama is really a performance thing, but we might not be having the luxury of only looking for performance because we might currently find well-performing properties in not so desirable locations. But if people can live anywhere because the technology allows you to be anywhere you want to be, they might not want to be in Montgomery, Alabama. Mm-hmm. And then it doesn't help so much that you have a great performing property in 2026, but in 2036, nobody wants to be there anymore.
Yeah. I know we've seen here in Pensacola, this is just, anecdotal for Pensacola, but I run into people all the time that lived in, Montgomery, even specifically, or other places, who have moved down to Pensacola because, they want to live on the beach. They want to live near the beach. And their technology allows them to work basically from anywhere. And so they chose to live here. And so I've seen that play out in real life. And so, there's a lot of credibility to that, I think.
Yeah, absolutely. And I see it myself too. We are in San Diego, which is a really expensive place, probably comparable to like Miami or stuff. And people, when they have the ability to live somewhere else, they do make these choices on quality of life.
Yeah.
Right. And so that's definitely something to consider. It's not only regulatory and taxations and stuff like that. I think it's first and foremost quality of life. And this is, I think, maybe a little bit of a surprise because we obviously I love to come on podcasts and always glorify everything that we're doing. But I think I want to caution people a little bit to start thinking and become a little bit more familiar, if you're not already. What does this age of abundance and this evolution in technology really mean across all kind of aspects of life? Not just because I said earlier we're not very good with exponentials, but it's also when you don't really pay attention to these rapid fundamental changes, you basically run the risk of being just plain out surprised, right? And when you have to react and act and basically structure your future out of a surprising or almost like emergency situation, mistakes happen. That's why anybody who is currently in a relatively stable situation listening or watching us, I would say take the benefit of being in that situation and make yourself more familiar what's coming. Some of it will sound completely crazy. I totally admit this. Happens to me even on a regular basis as well. But when you ask yourself, okay, even of the crazy stuff or sounding crazy stuff, if a little bit of that were to come, and a little bit of this, and a little bit of that, and a little bit of this, then you can already see, and this is what I see, a massive, massive change in how the economy and how money and how politics and how almost anything will work. And when we keep in mind, we don't know the exact year, but we know it's faster than we anticipate. You might think, oh, that takes 20, 30 years. And no, it might be only 10. And I can say, because I'm old, when I was 40, 10 years felt like an eternity into the future. Now I feel 10 years is nothing, right? And so 10 years is probably coming faster. And I guess the point for me is anybody who has raised their level of awareness and then starts to prepare as best they can for what is most likely going to come will be far, far ahead of anybody who is just saying, I do my life and I see what happens.
What do you think? So with AI, you've touched on that, and we see that obviously everybody is using that tool. From our standpoint here in the world of law and practicing law, AI is definitely a tool for us, and we use it. We have different sources, AI sources that we use. We pay a lot of money for it. But the sort of open platforms we see, for an example, opposing parties that we face who may not have an attorney, so they're representing themselves, and they use AI, and it gives them information that AI, I guess, thinks that it needs, but in reality, it's not helpful to them. In fact, it could hurt them. And so translating that concept into, say, real estate investing, do you see that investors are using AI tools that truly are not giving them the correct information, or at least not the full scope of what they really need to make good decisions?
The short answer would be yes. I think we're thinking a little bit too small when we're looking at what we currently define as AI, which I would basically say is similar to a tool set. It's similar in a way to when something like Microsoft Office came out, right? Where we don't have lots of paper anymore and you don't have to calculate every cell in a spreadsheet by hand and those kind of things, right? Those were like massive productivity boosters. And the tools that we have right now, where we don't just use Google search and we have 100,000 results and then we have to go on every single website. Now we have some ChatGPT or Claude or any kind of tool like that take all of that in a few seconds, put it in the context of our questions and give us basically a summary across however many sources. I still consider that a tool set. I think the real distinction will come when we have what's called embodied AI. Just to give a little example for that. Right now, I'm sure that there are lawsuits that you are involved with that basically revolve around the fact that something got done wrong. Some work was done wrong. Somebody behaved wrong. Somebody applied a tool wrong. Somebody installed something or built something wrong or checked something wrong. When you look into this not too distant AI, what we see right now, and the audience may be familiar with or have heard about autonomous driving, like Waymo is kind of like the leader in that right now. Forget about the technology in the detail for a moment. One thing that can already be said is when we teach an AI, an embodied AI that is ultimately moving a vehicle in traffic just like you and I drive our cars, it has to know every rule and execute on every rule perfectly or as close to perfection as possible. What's the result? Traffic accidents for Waymo with millions and millions and millions of miles driven is 90% less than humans. Mm-hmm. When you apply this and you say, okay, somebody wants to file a lawsuit against company ABC and they say, Tim, can you help me? I think they constructed this completely wrong in, let's say, 5 or 8 years from now. And you do your discovery and you find out they constructed the whole thing with humanoid robots. Mm-hmm. You would probably tell your client, you forget about it. These things don't make those mistakes. They just don't. So it's a difference to say, is a tool where the human gives the input and then we're hoping to get the right result, the thing to measure against something that has been taught the perfect way to do something and then executes it without ever being tired, without ever being imprecise, over and over and over and over again. So that's for me the big difference. That's why I totally understand that a law firm using AI needs somebody to basically check. And not just check at the result, but probably also say, if the result is marginal, let's go back and look, what did we ask this thing to do?
Yeah.
Because I believe there's a direct correlation. If you put garbage in, you probably get partial garbage out. Yeah. Now, when you look at the application of a trade, like an electrician, a plumber, a carpenter, a landscaper, or stuff like that, and I don't want to minimize it because I'm pretty sure it's really hard to do, but when you teach the thing the perfect way to do it, it does it all the time without fail, which is not what humans do.
Yeah.
Right. So that's a quality that I think we're not really quite familiar with because we haven't really seen it. We see these robots in factories that have this one arm and they can perfectly put 1 million tires on the axle in a car manufacturing. Well, translating that, right? Like, I don't know, my wife, for example, said 20 years ago, I'm not going to iron anything anymore. That's not because she doesn't like it, but she just hates the activity. But she says, if we get our Optimus robot, we will start ironing stuff anymore. And I know it's going to be perfect. Right? That's something that is, yeah, in theory we can talk about, but in practice we can't really completely see it yet. That's what I actually mean by the age of abundance. And age of abundance should be maybe extended to say age of abundance in time. Mm. When you really ask yourself, what do we spend a lot of our time in the 168 hours we have every week for? And how many things could somebody who knows every single trade, everything that needs to be done perfectly, right? I'm imagining, I like certain foods. You and I, we meet somewhere in Pensacola and we say, okay, we go out on the patio and I want a dish that I had in Paris 2 years ago. And Tim, I want you to experience it. Then we tell our robot, make that dish, download it from that restaurant somewhere there in that road there, and it's going to make it.
Yeah.
And it will be the same like as if you and I go to Paris.
Yeah. Yeah.
And that kind of stuff is still hard to imagine. But as soon as you open up your mind at the possibilities of what's coming, it's pretty amazing. And that's why I say again, try to become aware, try to think and maybe just imagine a little bit, and don't give yourself boundaries of what you think might be possible or not possible. Just let it flow. And then take the consequences and prepare as best as you can, because the people prepared with assets will still be better off miles and miles than those who just wait.
Wow. Yeah. Excellent. I'm going to try to get to somewhat of a closing segment here. I want to ask the question, what do you think that real estate investors should be doing differently over the next 12 months based on what you know and what you're seeing?
Right now, I would say ask kind of people in the millennial and Gen Z community, if they didn't have to have a job, if they didn't have to worry about money, if they could live to their highest potential and interest, how would that look like and where would that ideally be? Because those will be your future customers or your future tenants or your future whatever that we call it. I don't know if we're going to keep calling it rent or whatever, like subscription fee for staying within your compound or whatever. I don't know,
Yep.
But something like that. And I mean, for people like me, where the life expectancy is not that long anymore, it's kind of probably pretty traditional. But for the younger generation that is long-term going to be living in this new world, that's who you want to cater to.
Wow. That's a very thought-provoking question. I got myself thinking about that when you were asking it. But what you're saying is tremendously true, is that, that is your market in the future. So whether it's legal services or the trades or medical, whatever it is, you've got to cater your product and your service to what their life expectations are. So that's fascinating.
Yeah, the other thing is actually one little thought, if you don't mind, Tim, is most people, I include myself, I'm making the assumption that it's true for you. If you were to, for a moment, put aside what you do for a job and say, what else am I really, really passionate about? And you might have a few things. I for sure have a few things. I think most people would say the stuff that I'm really passionate about is even better when I can do it with other like-minded people. Right? So what we have done today mostly is to talk about in kind of like a passive role, where real estate investing, for example, or investing in general, is you have your Montgomery property because it performs well. There is no real connection to what we are passionate about. When we're looking into the future and we're interviewing these Gen Z or millennial people to say, what are you passionate about and where would you want to live out that passion? You want to ultimately get to the point to say, okay, I'm passionate about that too. So I want to live there too. And I want to do these passionate things that you are and I are together with you, with where my assets are. Right? This, what we used to have, I think, is one profound change is we used to say we're looking at an investment like stocks or whatever, separated from what we actually ourselves as the investor want to do. And especially in real estate, there is a potential future where you can say, I specifically invest where I can live my greatest passion together with other people who have that same passion.
Yeah. Wow. It's good stuff. Good stuff. Well, listen, Dr. Meierhoefer, I want to go ahead and conclude the show for now. I've enjoyed everything you've said, man. It's really, really thought-provoking and insightful. So I greatly appreciate your coming on the show. But I want to give you opportunity to just let folks know how they can find you, how they can reach out to you, and give them that information.
Yeah, thank you so much, Tim, and thanks again for having me. As we mentioned earlier, there's this book literally called Idea Wealth Grower, and the same is true if you put Idea Wealth Grower in Google or you put ideawealthgrower.com, you get to our website. If you go to the website, in the top right-hand corner is a little button that says Discovery Call. If anybody says, hey, I felt inspired or I want to know more about this mentoring program or so forth, that's the way to go. You click the button, you get on my schedule, and then we talk.
Great. Well, I'm sure there'll be some people interested in doing that for sure. So thank you so much, Dr. Meierhoefer, for your being a guest on our show. Everybody who's listening, thanks so much for joining us, whether it's via audio or video. Follow us. We'd greatly appreciate that. Make any comments that you'd like to. Hopefully they're all positive. And Dr. Meierhoefer, again, thanks so much. And I look forward to our next conversation.
Thank you.
All right. That'll conclude this show, everybody. Thanks for listening.